Hello everybody. As you can see on the slide, this is something to do with taxable incomes. You all have a subject called income tax. There are certain heads under which these incomes are calculated. There are 5 major heads. The slide which is displayed has those 5 heads. Can you guess what they must be? There's a picture of Kaun Banega Karodpati. There's a picture of an house for rent. There's a picture of some professionals. There's a picture which just says business. There's something called capital gain. And there's something called salary. You all have rightly judged. These are denoting different heads of incomes to be calculated under income tax. Income from salary is the head under which an employee under an employer, in whatever form he gets the amount, whether it is in cash or it is in kind, if he gets a certain amount in exchange of his efforts, we call that as income from salary. Some amount may be given in the form of cash, and there may be certain other things given as benefits which is not in the form of cash. Those may be considered as perquisites. So how do we identify what components of this salary will comprise the taxable income? Taxable income here refers to the amount which needs to be taxed. Income tax department will collect a tax on the income, but not on the entire amount which we get as salary. There are certain breakups of the salary which are not fully taxable. They are partially taxable. Now this is what we are going to learn today. We will discuss the other heads later, but now in this class we are going to do a small sum on income from salary. Let's see how to solve the sum on income from salary. Now this is a small sum of an employee who is working with Associates. You can see the question displayed on the screen. His basic salary per month is 22,000. Dearness allowance per month, they have given something in bracket, not included for retirement, 5,000. Commission, again in bracket, lump sum amount, 10,000. COVID hospitalization allowances, 65,000. Transport allowance, children education allowance, hostel allowance, gift, dinner set on occasion of Diwali, house rent allowance. And they say Mrs. Lena, who is the employee, stays in her husband's property. She pays him rupees 3,000 per month as rent. Okay, so 36,000 she pays as rent. We are supposed to compute total taxable income of Mrs. Lena under the head income from salary for the assessment year 2020-2021, or in other words 2021. Let us understand, to solve income tax sums, to identify the total taxable income, Income Tax Act has given many provisions, and we have to calculate the taxable salary. So here we have to consider all those provisions, exemptions, deductions, and thereafter we have to compute and identify how much will be the taxable income under the head salary. Now to do this, we need to understand that for every such partially taxable, say, item of salary, there will be a specific provision given. Now on the slide we can see 3 buttons on the right hand side: salary for HRA, HRA and solution. So HRA here refers to house rent allowance. Now, as we discussed earlier, allowance is something which is given in cash for a specific purpose. That amount needs to be spent by the employee to rent a house. That's house rent allowance. Is the entire house rent allowance which is offered by the employer to the employee fully taxable? No. It is partially taxable, and there are certain rules. Among the rules, one sub rule is to calculate this house rent allowance. You need to identify the value of salary. So for the purpose of calculating house rent allowance, 3 things are included. The salary for the purpose of house rent allowance includes 3 things. What are those 3 things? Basic salary. The total amount is inclusive. Dearness allowance, only the part which is going to be included for the purpose of retirement needs to be included. And a fixed percentage of commission on turnover, which may be on purchases or sales or whatever. Only these 3 things will form part of salary. So for this sum, let's try and calculate and understand how it is calculated. So when I click on this button, I go to the next slide, and there are 3 things highlighted over here. Dearness allowance, part included for retirement benefit. We just now discussed that only the part which is included for retirement benefit needs to be added. There are certain other 2 things which are again displayed over here: total salary and 40% of salary. The rule says that the least of 3 need to be deducted from the actual house rent allowance received. So for that purpose, we need to calculate the percentage of salary. Here we are calculating salary because we have to calculate either 40% or 50% of salary. That's one of the rule which we have to, and that's why this calculation is to identify 40% of salary or 50% of salary. For yet another sub rule, we need to also identify 10% of salary. So this is what we are going to calculate here. Okay, so this is computation of salary for the purpose of house rent allowance. Okay, so basic salary, as we discussed, the entire amount has to be included in this sum. We know what was given. Let's go and check. Okay, they said that dearness allowance per month not included for retirement, 5,000. Okay, so what we are supposed to do? Are we supposed to include? No, will not include. Okay, because it is not included for retirement benefit. And the next is commission. Again, it is a lump sum amount paid. Okay, so what would be the salary? 2,64,000 is 22,000 into 12 months, because that is for 1 month. As we discussed in this case, though the employee is receiving 5,000 rupees per month, but that amount is not included for the calculation of house rent allowance alone. Dearness allowance is fully taxable. When we come to the solution, we'll see that. Okay, next is commission. Again, as we had discussed, only fixed percentage on turnover can be included. Lump sum amount of commission is not inclusive. So the total salary for the purpose of house rent allowance will be only 2,64,000. As we discussed earlier, that we also need to calculate 10% of salary. So we have identified what is 10% of 2,64,000, and we have identified 50% of salary. One of the rules says that if the employee is situated in 4 metropolitan cities, Mumbai, Kolkata, Chennai, okay, in that case 50% of salary needs to be calculated. Otherwise, it is 40% of salary. Let's check where does the employee stay. Okay, so employee is working in a company which is in Chennai. So obviously the employee stays in Chennai. So 4 metropolitan cities: Delhi, Chennai, Kolkata and Mumbai. These 4 we are supposed to calculate 50%. The rest we will calculate 40%. All of India, other than these 4 cities, we have to calculate 40% of salary. Okay, so this is how we found salary first for the purpose of house rent allowance, and then we calculated 10% of it and 50% of it, because in this sum we require 50%. Then we go to the next step, that is we have to find out how much of house rent allowance is actually going to be taxable. Now what we are going to calculate is the amount which is deductible or which is exempted. To calculate that, we need to follow the rule. So what is the rule? Okay, a house rent allowance, the total amount which we have received is 90,000. We have to exempt least of the following 3. What are they? First, the actual amount received. How much is the amount received? You all can see on the screen, 90,000. Okay, now the employee is in Chennai. So in that case, what is the second option? 50% of salary. That, or the third one, it will be the amount which is paid by the employee for the rent, to rent a house, minus 10% of the salary which we have calculated for HRA purpose. So it has to be deducted from that. So that would be an amount, okay, which can be deductible. So these are the 3 options, but the least of the 3 can only be deducted. Okay, so here 90,000 is the same amount as we had discussed earlier. 50% of salary we found 2,64,000, so 50% works to 1,32,000, and the rent actually paid by the employee 3,000 per month, so it becomes 36,000 minus 10% of salary we have calculated, which is 26,400. The difference will be exempted. Okay, so 90,000 minus how much we have got? We have got 3 figures: 90,000, 1,32,000 and 9,600. Which is the least among these 3? Is it 90,000, 1,32,000 or 9,600? Obvious, the one which is marked in red is the least, and that we are going to deduct. Okay, so we are going to deduct 9,600. So the difference is 80,400. So this will be only the 80,400 is going to be taxable, though the employee has received 90,000. This is what it means. Okay, so this is how house rent allowance needs to be calculated. Okay, now we have done the major exemption, okay, an item which required a provision to be followed, and that item was house rent allowance. So we have calculated. Now let's go to the solution. Okay, again I have highlighted dearness allowance. We are going to calculate the total salary which the employee is going to receive. Now the amount on which the employee is going to pay the tax, that is what we are going to calculate. So on what all amounts are we supposed to calculate? Let's see. See, I have highlighted dearness allowance because that amount was received but not calculated for HRA. Reason being, it was not included for the benefits, retirement benefits. That was the reason. Okay. So now the first item in the question was basic pay. Entire amount is taxable. Dearness allowance, entire amount is taxable. Commission, lump sum amount, fully taxable. COVID hospitalization allowance or any other such allowance, fully taxable. Transport allowance, fully taxable. Children education allowance, the amount received is 3,000 for 3 children, 9,000, but there is a provision, you can exempt rupees 100 per child per month. So 100 into 2 into 12. Though the employee has 3 children, exemption is allowed only for 2 children. So we can deduct only for 2 children, which comes to 2,400. The balance is taxable. House rent allowance, we had already calculated the exempted amount and the difference is 80,400, which is fully taxable. Hostel allowance, there is a provision. Similarly, just as we calculated children education allowance, we can exempt 300 rupees per child for a maximum of 2 children for 12 months. So it works out to 7,200. So the difference 4,800 is taxable. So the total taxable salary will be the total of these. Now there's one item, note, gift in kind. Gift in kind. Okay, we saw dinner set was given on the occasion of Diwali. That is fully exempt up to 5,000. If the amount exceeds 5,000, then it will be fully taxable. For example, the value of that gift was 5,200. Full 5,200, we have to show it as taxable income. And if the amount is given, the gift is given on Diwali, employer does not give this amount in cash, but gives, it does not give in the form of a dinner set, but gives in cash. Even if it is less than 5,000, even if it is 4,300, fully it will be taxable. Okay, so the total taxable salary for this purpose works out to 4,96,600. Now this is taxable.